You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. Like I like to say here on the old program, 13 great shows available for you on the old network, including over 400 archived episodes of the Option Block. So if you got some time to kill on your commute, on a plane or a train or wherever you might be, you're just hanging out by the pool, want to catch up on some options talk, well, we've got it for you in spades, over 400 hours just on this one program feed alone. You add in the other dozen, you got well over 1,000 hours of great options goodness available for you. Where can you find all that goodness? Well, of course, theoptionsinsider.com. Click on the Insider Radio Network tab. The overlay will pop up showing you all the shows there on the site, and just click on the show you want to listen to. It's pretty much that easy. And then you can scroll down, find the episode you want to listen to, and you're off to the races. Of course, you can also do it iTunes, Stitcher, Aha Mobile, wherever you like to find your favorite podcast programs. And if that's all too complicated for you, just go get our mobile app, available for iOS, Android, and the Fire OS. It's all baked into that. You can make your own playlists. Hey, I only want to hear Option Block and Vol Views, or maybe I only want to hear Options Boot Camp and the Advisor's Option. Whatever the case may be, you can build your own playlists and have fun mixing and matching till your heart's content. So we encourage you to check it out however you find it. We don't mind. As long as you check it out, we're happy. And joining us on the old program today, starting off with the man of many hats, also myriad fine watches, I am discovering. He is none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Alex, how you doing today, and how are your many fine hats and watches?
It's good to be here, Mark. Yeah, the word is out. I'm a watch guy. All good. Today was an interesting day. I expected it to be a lot worse, given the news out of Greece and the EU, and it was a rather uneventful day. Lot to talk about today.
I'm sitting here with my latest addition to my wrist, Andrew. Alex, I'm not sure if you'd find it suitable, though, because it's more geared towards getting me my IM messages and my email notifications than it is my fine chronograph measurements. But I think to each their own when it comes to wristwear. Is that not the case, Mr. Viceroy?
Yeah, I'm old school. It's got to have bells and whistles and gears and all kinds of stuff. So I'm very, very old school.
Well, if it makes you happy, one of the watch faces I can choose, an old school analog watch face. And I do choose that sometimes, so a bit of a throwback to the old times here. All right, and joining us on the old program today, beaming in from the great principality known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always good to be here. Actually, we have some snow coming down from the sky today, so exciting times in the Midwest.
Well, it's nothing like the snow getting back east. That's a serious business. I have a lot of family still in the Connecticut and New England area, and they're just getting crushed. So it seems like southern New England is not the place to be. Pretty much every airport in that region shut down. All of New York City after 11 p.m., I believe. Nothing except emergency vehicles will be allowed on the streets. So serious business in that neck of the woods. Compared to that, this is nothing. This is a light dusting.
Totally agreed.
Joining us from near that neck of the woods, Mr. Rock Lobster, our unusual activity editor extraordinaire, as well as myriad other hats. He does some stuff over there at the place called The Pit, does a bunch of other fun stuff. Mr. Rock Lobster, welcome back to the show. And how are you guys faring up there in the hinterlands of Maine? Has this snow reached you, or is it pretty much farther south?
Well, I'll give you a couple anecdotal things. They actually canceled hockey practice 24 hours early.
Wow, that's serious. That's serious business in Maine when they're shutting down the statewide pastime. You know, it's serious business.
I've had blizzards and they don't stop a hockey practice, and they got 24-hour notice. This must be the storm of all storms, is all I can say.
Well, that's serious business. I guess we should get rolling with the show then before the storm wipes Andrew off the map then. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what caught our eye in today's trading activity. We're recording this Monday, January 26th, for all of you playing the home game. And some interesting stuff afoot. Alex alluded to the Greek elections. We talked a lot about those on our Volatility Views program on Friday as well, that being kind of the chief consideration going into this long weekend of what might actually happen over the weekend. And it seems like the markets certainly were not reticent to crush vol ahead of that Greek election. It seems like all anybody was really caring about was the ECB. And once that announcement came out, they were just free to hit the vids in pretty much every volatility product out there. And it didn't really seem that concerned about the Greek elections. And it looks like maybe now, even with the quote-unquote worst-case scenario kind of coming to pass out there, and the lefties, the commies, whatever kind of pejorative you want to call them out there, taking the reins in Greece, the market kind of shrugging it off today. Most of the major indices pretty much unched on the day. The Dow almost exactly unched. The S&P up 1/4 percentage point or so. The Q's off about 1/10 percentage point. Really not much movement until you get out to VIX land. VIX off not a full point, but about nearly a little over 3/4 of a point there. A full handle, I should say, not a percentage point. So some movement out there. I guess there was some more vol to be squeezed out after the fact. So whatever we talked about with the crushing on Friday, seemed like there was more crushing to be done today. So perhaps we'll start with you, Mr. Rock Lobster, before the snow gods tear you away from us. What's your take on the market's kind of resounding shrug to the old Greek elections, as well as their continued willingness to just pound away at all things vol?
I guess the first thing, like two things happened that not very long ago would have moved volatility a bunch. One is they elected some sort of crazy leftist party in Greece. And the Russian debt got downgraded to junk, and they're shelling Ukrainians and all kinds of like bad things. And VIX is down one full handle. So unless we are in the new paradigm of we don't care anymore because the U.S. is chugging along, I think at this point, a lot of this information, a lot of this global bad news is kind of getting baked in. Oil prices are going to be low for a while. Russia's going to do what it's going to do. The Greeks are going to realize that they don't have any money and they can't do anything anyway, or they will plunge the country into some sort of hopeless despair, which I guess the new guy is going to figure out once he starts seeing how things work. And that's apparently what the markets are pricing at this point. And we'll see how that all works out. As of right now, at least it doesn't look like anything earth-shattering is going to be happening this week, considering how they marked whatever vestiges of vol, right out of the marketplace today. They didn't waste a whole lot of time. I mean, it was kind of a slow grind all day. even when the S&P 500 was down 3 or 4 points, VIX was down on the day after the weekend reset for the weekend effect. So I just don't think anybody cares. You know, we have an FOMC meeting minutes on Wednesday, and kind of the landscape has changed since then because of the European QE. So, you know, at this point, maybe the market just doesn't do a whole lot. We need earnings to be great in order to rally a lot, and some of these other issues to kind of go away before we can, you know, see some lofty new highs again. And for whatever reason, they defined all that today.
Just ask the geniuses over there at Long-Term Capital how important a Russian downgrade / default could be in your modeling. I think that's a great example of how that could have some surprise ramifications down the road.
Yeah,
for
back
people.
then, VIX went till 34. Today, down $1.
Yep. Just shows how our frame of reference has changed. That's just a resounding shrug now. That was a big deal a few years back, and now,
Well, the Russians did run a budget surplus. I mean, they, you know, it's just they have manageable problems, and they're mostly of their own creation. They could fix them if they choose.
That's true. Well, other things we're keeping an eye on here in the trading block. We have some earnings that you might expect coming out after the bell here. Probably chief among them being good old softy, Microsoft. They closed pretty much right at 47 and a couple of cents. And looks like that 47, 46.5 straddle range went out about $1.70, $1.75 or so. So expecting a wee bit of a move. Looks like the number may be out already in the after hours. And good old softy off about $1, trading right around $46 right now. So we'll keep an eye on that one. See how that plays out. If it plays out like its cohort there last week, Starbucks, the early move could be just the harbinger of a much larger move to come in the following session. We'll keep an eye on that. Meanwhile, speaking of earnings, Uncle Mike, what caught your eye in today's activity? We'll get to the good fruit stuff down the road a little bit, but what caught your eye in today's moving and shaking?
I'll tell you what caught my eye in today's moving and shaking was the energy sector. XLE is up $1.10 today, which is little over 1.4% on the day. Both oil and natural gas were down. And so I think that's kind of an interesting thing. If you're an oil bull right now, we're trying to buy in on the lows, which we are a little bit. I think that that's probably the most interesting thing of the day right now. Just looking at the shiny stuff and the metals, gold and silver were down a little bit today, about 1% in gold, about 2% in silver. So not a huge down day, especially considering the upswing with which they have had lately. Aside from that, I think that there's really not a lot going on right now per se. The one thing that I do think could be a market mover this week, with the exception of the earnings, is the Fed announcement. Does it mean, are they just going to punt again, or are they going to say something along the lines of, well, we're bullishly bearish about possibly being dovishly hawkish and maybe raising rates at some point in the future, although we don't know when, or one of those types of statements? Or could this be the big interest rate raise? My guess is that it won't be, but I think that if there is one thing that could and would definitely move the market, is if the Fed did decide to have the inevitable rate increase this week.
Yeah, you mentioned oil. A lot of interesting stuff cooking out there. Of course, you mentioned last week that the head of Saudi Arabia passed away, and of course, that was a lot of concern for people out there saying, hey, perhaps they're going to reverse some policy out there. It seems like the people who are taking the reins over there, keeping that same policy in place. That's good or bad, I guess, depending on your outlook on crude. We also had some interesting statements coming out of the head of OPEC today, saying that this kind of what people have expected them to say for a while, but they really haven't been saying, that he feels that it's hit a bottom sometime around this time. He says he's not sure how long it's going to last, not surprisingly, but he expects the price to rebound. We also saw, surprise, surprise, some of the big oil companies waving their fingers and warning of a $200 a barrel oil by the end of the decade if this price doesn't reverse soon, and saying that this is going to stymie investment in the space, and all the other warnings we've been hearing for a long time. Of course, not surprisingly, those guys have a vested interest in talking oil up a little bit. These levels are not exactly ideal for them out there these days. Also of interest, OPEC kind of pointing the finger at their non-OPEC partners, saying, hey, we've been producing pretty much a steady 30 million barrels a a day for the past decade. We haven't increased our production. It's the non-OPEC countries who have raised to about 7.5 million barrels a day. So if anyone's going to cut, it should be them. And it's kind of a little of a finger waving a little bit back and forth at each other. So interesting to see how all that shakes out. Meanwhile, oil kind of still in the basement as a result, not really getting much love out there. We'll keep an eye out there. Of course, ICE Brent, the March Brent contract, still off, still south of the 50 handle. So no love to be found there anytime in the near future. Interesting stuff all across the board. So, Mr. Viceroy, we turn to you now. A lot of stuff cooking macro, earnings-wise, commodity-wise. What really caught your eye in today's event, sir?
Well, I think that the talk about energy was clearly interesting today because, to the points that we've kind of all made here, the contracts weren't up, but the stocks all were. So they clearly talked it up today. I mean, Mike talked about that. The Schlumbergers were up, the Conocos were up, the Exxons were up today, but yet the underlying was still down today. So it's interesting. I mean, many years ago we used to talk about being able to talk up or down the interest rate market or the rates market, the foreign exchange market. And, central banks would come out and talk about supporting, or as we saw recently, not supporting floors. But today it was the talk that drove the stocks up. As you pointed out, though, Mark, the other thing that was driving the market today was lots of earnings this week: Apple, Amazon, Facebook. So we saw lots of play in the weekly out of the monies today, especially in Apple. Lots of stuff going on in this week. The 120 calls, the 105 puts, but there was lots of that stuff going on today.
I think my favorite story, speaking of earnings season, my favorite story so far to come out of earnings season came out of Mattel. I think, Uncle Mike, you probably commiserate with this. Someone who has a young daughter, anyone who has a young child, particularly a daughter these days, will probably commiserate with this story. Mattel taking it on the chin, down about 5% today, or $1.40 to about 26.5 or so. And their CEO announcing that he's stepping down today. And of course, they're doing a lot of volume today, as you might expect as well. They usually do about 3,400 contracts a day, doing well over 20,000. So lighting it up. Almost 3-to-1 puts over calls. I should tell you again where the interest lays in the options today. And the interesting thing that I saw, the reason they cited, they got hit on some currency rates too, which certainly exacerbated the situation. But the main driver of their poor performance and the reason the CEO is stepping down is because Frozen is kicking the crap out of Barbie. So apparently no little girl wants to buy a Barbie doll anymore. They all want Frozen, Anna and Elsa and Olaf and all that fun stuff. Uncle Mike, I'm sure you probably have some of that going on in your house right now.
Yeah, I have to say that we're probably definitely not that friends of that CEO based on the reason with which he's stepping down. My daughter's definitely more of a Frozen girl as opposed to a Barbie girl. I'm learning. It
is amazing the stranglehold that Frozen has on the youth as well as on our economy as a whole. It just keeps on giving or taking, I guess, depending on your viewpoint.
The movie's as old as the movie is, it still has that same stranglehold.
Yeah, the movie's like a year and a half old now, and it's still just printing money for them. Unbelievable. Crazy.
The remake will be out in the second quarter. Frozen 2, I think, is scheduled for May, June. So they've got their marketing hat on. They've got it figured out.
And I was watching my little guys, just a complete anecdote before we jump into the odd block. I was watching my little guys' Halloween party for kindergarten this year, and the boys had the superheroes and all the other fun stuff. It was pretty much a mix on the boy side. The girl side, it was pretty much Frozen, something else, Frozen, some other princess, Frozen. Every third girl, every second girl was pretty much in a Frozen outfit. So you could just see right there the monopoly that Frozen has. And clearly, Monopoly has such power that it ousted the CEO of Mattel. So interesting stuff. Of course, some other stories to hit on really quickly. We talked, a lot of people have written we talked a little bit on this show about Bitcoin and kind of the furor that's erupted over that. The folks at Nadex have launched Bitcoin derivatives. Terra Exchange and others have launched products on that. Well, the first actual exchange, you guys have probably heard a lot about this, Coinbase has launched today. This one has gotten a lot of VC backing from some pretty prominent names out there. So getting a lot of attention. It opened for business at 9 a.m. today. Of course, maybe not the best day, given the fact that half of the street was fleeing a massive storm. But we'll see if this exchange, in quotes, can get some volume. We'll certainly keep an eye on this. This is a story we'll be covering a lot, of course, on our Trading Tech Talk program. But now it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we tell you what's catching our eye over here at the Options Insider in terms of unusual options activity. Of course, if you want to find out all the details on the alerts we're talking about, as well as the many others we don't get a chance to talk about on the old show, surf on over to theoptionsinsider.com. You could find them all there. Meanwhile, we're going to kick things off with a much maligned name here on the old program, sometimes fairly, sometimes perhaps less so, but still, it takes its fair share of drubbing on the old program. This is USO, the old United States Oil Fund ETF, closing today down almost 1% to $16.87. This one, as you might guess, does some decent paper, about 190,000 contracts a day, and staying right around that same level, about 200,000 contracts today. So it wasn't overall volume that caught our eye so much as one trade of interesting size, shall we say. And it's pretty near-term stuff, too, as it turns out. In particular, what caught our eye out here where the weekly, so coming up at the end of this week here, Jan 16 half puts going up for size for 18 cents, paper selling. We noticed a big block of 5,300, but as the day went on, a ton of size went up on this strike to the tune of nearly 22,000 contracts. Of course, look at the open interest, also about 22,000 contracts open on the strike. So, surprise, surprise, this may be indeed a closing paper. Other blocks did go up later on. We saw some prices at about 29 cents as well. So yeah, interesting stuff out here. It looks like closing paper here out in the puts. Someone having a bit of opportune timing, looking at a chart of USO, and it hasn't exactly been straight up of late. It's more been on the other side of the fence. So these puts perhaps working out for this fellow. Mr. Rock Lobster, what you take? You think this is closing as well? And is our friend smiling or have a frowny face out here in USO?
Smiling or frowny face. The 16, this will be one I have to check the open interest on. I thought this was part of like a broader pattern of selling kind of near the money puts in oil and oil related stocks. I saw some volume earlier in OIL and KMI, stuff like that. I'm just going to say I wouldn't be surprised if this was more short open interest on the strike. When I first looked at it, it looked like it was probably closing, but
it's almost exactly the open interest. That's what kind of catches my eye, you know. When
it is.
Few coincidences out here.
It traded big chunks. I mean, the volume just went over the open interest by the end of the day. I mean, it does look like it quite a bit, and there's only 4 days to go. So if it could easily be covering, but if you were long this put and sold it now, you probably didn't make a whole lot of money. You know what I mean? You're kind of here at the bottom. I mean, what did you pay for these puts? Oil's been sitting around here at $17. So I can't imagine you made a whole lot if you're dumping them today at, in the 20-cent range or whatever. So I don't see if somebody was long these and they were selling them to open, they shouldn't make a whole lot of money today. At 18 cents.
Yeah, it is odd timing to close them out. They do have a whole week to go. If they did pay for these things, they might as well get their whole week. But maybe they decided to reverse course and take what they could get. That 19-cent kind may leave a bit of a mark. The other kind might be the 29-cent, probably a little bit happier with that. But still, interesting stuff. Yeah, you're entirely correct. It could possibly be someone else diving in with almost the exact same amount of paper. It has happened. Weirder things have happened, hence the odd block. But yeah, it's just one of those ones that if it smells like a duck and it stinks like a horrible duck, then chances are it's potentially a duck. All right,
kind of ducky.
Moving on to another seemingly fitting name here, a bit of a theme to the old odd block today. Our next victim, ironically, pun intended, is NextEra Energy Inc., ticker symbol NEE, closing today 109.75, up about a quarter or so on the day. This is the name that does about 1,200 contracts a day, so not bad from an overall volume perspective. Certainly not a market leader, but not the worst we profiled here on the old odd block either. And doing just a hair shy of 4,000 contracts a day today, I should say. So fairly decent volume out here in good old NEE. And what caught our eye? Again, some near-term paper, not as near-term as what we were just talking about, but out in the Feb expiration cycle. In particular, it was the Feb 105 puts that caught our eye. Again, these are about $5 out of the money, trading today 109.75. We saw paper coming in to gobble these up. The first block we saw was a little over 1,000 for 85 cents. As the day went on, and about another 1,500 or so piled in to the tune of about 2,600 going up on the strike, all on open interest of 800 contracts and some change. Earnings coming out on the 30th, so this could be a straight-up spec because it is opening, or it could be one of our friends out there who's long a good chunk of NEE deciding to put on some very near-term protection. Again, very near-term stuff. Probably someone who's a wee bit concerned about earnings. Looking at the chart out here, this has been a bit of an upward moving story for the better part of the past 6 months out here in NEE, so someone could clearly be concerned about maybe giving up some of those profits. The last time they reported earnings back in November, they were right around the 100 handle, so perhaps concerned that they'll be retracing down there. Either way, perhaps some protective paper. Mr. Rock Lobster, where do you fall on this divisive trade? Is it someone specking, or you think someone's locking in some profits?
That was the exact question I asked myself. Because I didn't see any paper go up with this. The only thing is, with the theme of, okay, this is kind of an alternative energy generator, somebody's selling puts in all those and some of those other kind of oily type names, and now they're going to buy puts in the alt energy generator. No. So it did feel like kind of a spec on earnings to me, although they certainly didn't spend a lot for it. 85 cents for a $105 stock is not a tremendous amount going through earnings, so it doesn't look like there is a whole lot of surprises coming out of NEE, but it's feeling like a protection type trade, I would have to say. If I were to ponder.
If you had to ponder. And you are indeed paid to ponder, so ponder away, sir.
I'm gonna ponder in that direction as of right now, but the name has come off a little bit. It's not quite as rosy as it once was, and the alternative energy thing, maybe it's running its course. Who knows? Now that oil is basically prices have cut in half, right? So yeah. They could be a little bit more of a competitor to a name like this. No. You're hovering around the highs of the year here, right around it. So, but I mean, the range of, let's put it into perspective. The range of this name in 2014 was 105 to 110. That was the range. So you're buying a 105 put. I mean, what do you really expect out of it? You're expecting something really bad to happen, because that's essentially, the 1 year low, or maybe even the 2 year low. So it's a little bit of a head scratcher as far as that goes, but somebody maybe just is a little nervous and they want to get through this earnings cycle.
Yeah, that level kind of drew my eye as well, because they are essentially locking in right down to last year's low. So I guess they could expect a retracement to there. They probably are worried about something a little bit more aggressive, hence their concern to gobble up some puts. And you're right, you're mentioning the impact on the alternative sector of all this continued pressure on oil. It's kind of interesting. I've been watching all the news coming out of these early part of the year auto shows, and the whole story, every big automaker lined up the year to kick it off with pretty much new electric cars across the board. And all anyone is saying now is, what do we need an electric car for? Gas is back under $2 a gallon again. So they have a little bit of a tough road ahead of them in that side of the fence. And maybe the folks over here at NEE are starting to feel some of that heat as well. But since it is earnings week, a lot of big tech names coming out this week, we thought we'd wrap up the odd block in that direction, heading on over to the tech side of the fence for an old school tech name, about as old school, at least in the last decade or so as it comes. This one was a big mover and shaker back in the big 90s .com boom, then kind of hasn't seen as much action of late. Maybe they'll get some more action going. This is Micron Technology, ticker symbol MU. Pretty much unched today, closing right around $31. This is the name that does, as you might expect for a name you've actually heard of, do some decent volume. Of late, it's been really lighting it up to the tune of 106,000 contracts a day. So some sized paper going on out here. Today, doing about half that. So actually a light volume day overall from a Micron perspective. But in spite of that, we still can find some unusual paper even in light volume days. And what caught our eye came in the April expiration cycle in here. In particular, the April 24 puts going up for some decent size. When we profiled them this morning, about 1,082 going up, paper selling for about 28 cents as the day progressed. A few more contracts piled in to the tune of about 4,000 total, 4,200 actually total. Subsequent puts going up again about 28 cents. So in that range, these puts went out 25 cents at 27. So they're at probably all at 28 cents or a little bit worse for the bulk of these trades. And again, we're seeing an open interest of a little over 3,000. So this is opening paper here on this strike. Didn't see any stock going up with this. Didn't see any other indications that there might be anything else afoot out here aside from your standard run-of-the-mill put sale out here with some decent size. And a 24 level, if you look at a chart here, I'm looking at the 1 year chart for Micron. 24 level is not a bad level. It's got to retrace back to where it was trading back in April of last year. So pretty much it has to give up all of the gains it made for, and it was trading a lot higher towards the end of last year. It got up to about 35 Micron. So it has to give up pretty much all the gains it's still got, as well as a lot more to get back to the level of 24 we was trading back in April. Perhaps our friend here thinking that might not be a bad level to buy some Micron and putting it on to the tune of about 4,000 contracts. Mr. Rock Lobster, it's been a while since we've seen Micron lighten up the old tape. What's your take on our friend blasting out some puts here in good old MU, and not Monsters University, but Micron?
Exactly. Huge open interest in this thing.
Yeah, they've been doing some paper. I was kind of surprised.
It still has a lot of volume. Like almost every strike, 8,000, 20,000, 60,000. And somebody's just deciding, I'm going to sell the 24 puts. The yield's like maybe 1% or so on where Micron is trading to April. When you sell a put, you always think you want some yield out of it. So someone is willing to take, not a lot of yield on the equity for this roll down. You got to sell puts. You have to put money to work. And that money is going to pay them, a little over 1% or right around 1% till April. So they're not looking for a whole lot, possibly take Micron at the 24 handle, but it's not I would not call it a great put sale, relative for the capital you have to employ to get it. So.
Yeah, people always have this feeling that, put rights are just this kind of magical free money. They forget about all the capital you have to tie up waiting for that put to either be assigned or go out worthless. And in this case, this guy's doing it all the way out to April for, you're right, a little bit over 1%. That's not exactly, we've seen a lot of good yield plays of late. Not sure if this one really qualifies as a,
ho-hum.
This is probably more along our lines of our friend who rolled out to April from Jan for a little over 7 cents. I probably would
maybe
qualify.
They read the same book.
Yeah, I think so. And it wasn't Natenberg.
But I can't say nothing is certain, but it's a lower risk put sale. We'll just call it that way if there is such a thing.
All right. Thank you for that, Mr. Rock Lobster. That's going to do it for the old odd block today. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It's time for the Viceroy to strap on his fanciest of fancy caps, and perhaps, if we're lucky, a fine chronograph as well. And then Mr. Viceroy can proceed to take us behind the scenes into the land known as Options Express by Charles Schwab. Mr. Viceroy, what was cooking at OX today, sir?
So, first of all, we're going to do a little patting of the back for the technology team here. Investors Business Daily did its top brokers this weekend, and both OX and Schwab fared well. We're both in the top 5, but the top broker for option trading, the best platform, was awarded to Options Express this year. So a couple of the things they showcased, and I know we talk about this on the show all the time, is robust suite of trading tools up here. And 2 things I want to focus on today. I'm not going to do Hub today because I know I get accused of kind of overweighting Hub because it's my baby. But the all-in-one trade ticket and the walk limit feature. If you haven't visited the Options Express website, and you do get a chance to go online and look at the write-up in IBD, 2 things you need to be aware of that are really powerful tools here. Walk limit does exactly what a savvy trader would do. It works your order. So if you're entering spread, if you're entering a single leg, if you're entering a buy right, and you're trying to trade between markets, you're trying to find some maybe dark liquidity or an order that comes in after your order hits and do a little better. What walk limit does is it allows you to walk a credit order down or walk a debit order up. It does it electronically. It does it automatically. And get this, it costs nothing. There isn't a day that goes by that I don't get an email from somebody that says, do you know that this firm is charging cancel and replace fees and this firm is charging inactivity fees? None of that stuff. Walk limit at OX, the only thing you ever pay for is a fill. So if you cancel a replace order, if the market in an order, if the NBBO, the natural, is $10, $20, and you want to try to sell them at $1.15 in the middle, or you want to try to buy them at $1.16, kind of towards the middle, walk limit allows you to enter a limit, adjust the limit. It'll do the cancel and replace and re-enter the order, and it does it all electronically. And 2 points I always make with walk limit is, yes, it may save you some money. And I know to a lot of people, commission costs, saving money are everything. They want to trade at the cheapest place, no matter how crude the tools may be. But the thing about walk limit is not only may it save you money, but it saves you time. Now, on a day like today when the market was quiet, time is maybe not that valuable unless you've got a day job and you could only devote a couple minutes a day to looking at your portfolio. Another product I want to showcase is the all-in-one trade ticket. And again, the article kind of focused on the tools here, but the all-in-one trade ticket is the ability to enter multi-leg orders, to enter what we used to call in the early days of electronic options trading, to enter a spread as a spread. And again, try to trade the markets a little better. But kudos to the technology team here. Kudos to all the people behind the scenes. Top options trading platform 2015. The award went to OX.
Well said, sir. Well said indeed. And those of you wondering, all that good technology is sucking up Alex's bandwidth. That's why he's coming to us via the miracle of Alexander Graham Bell technology. Don't worry, we'll get him back on ye old Skype soon, so he will sound as robust as he usually does. Meanwhile, in talking about things that are robust, it's time to keep on rolling because it is Monday. Time to roll on to that most robust of segments. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what time it is. It is time for Uncle Mike Tusaw to put on his fanciest smoking jacket. Indeed, he has quite the collection. I encourage you to head on out to St. Charles and see it for yourself, listeners. But put on his fanciest smoking jacket, grab his stone tablets from off the wall, grab his bubble pipe if he's so inclined, and sit on down by a nice roaring fire to dispense some options, wit, and or wisdom. Uncle Mike, a lot of directions we could go today, a lot of things cooking, including the big earnings announcement tomorrow, so perhaps some pre-earnings strategery going on there, or indeed what's cooking. And I know you've been talking a lot about XLE a lot lately, too. There's a lot of different directions you could go with today's Strat Block. So which way are you so inclined, sir?
Because I love the audience so much, I'm going to go in every direction today.
Uh-oh. Epic Strat Block alert.
No, it's not going to the epic. But then again,
way to undersell yourself at the beginning.
I didn't think the epic one was going to be epic, so who knows? The spirit may move me. We'll see. Couple things I want to go through today. Of course, we have Apple earnings tomorrow. And yes, it is tomorrow, meaning we're recording this show on the 26th. It is tomorrow, the 27th, after the market when Apple has their earnings. Going into the earnings announcement, I still don't feel that I'm ready to get into the backspread tool yet, going into Apple earnings as of yet. So for now, I'm still just simply long stock, long put, keeping it simple. Maybe next earnings I'll get into the backspread, but for now, we're just keeping it fairly simple. I want to go through my sentiment in Apple, and just to kind of give you an idea of it, some of my listeners, some of my clients listen to this show, some of them do not. And so I'm going to kind of give you a little bit of an indicator in terms of one of my Apple indicators, so to speak, to start with. Usually the retail public gets it wrong, except with Apple. And with Apple, just so long as everyone buys it, it's okay. And I think one of the indicators that I gave a couple of weeks ago was at my morning Bible study. One of the guys, just the first thing that I sat down, I've never said anything about markets or trading or anything to this group. And first thing, and I just sit down, he's like, I just put all my retirement into Apple. And so I'm like, oh my goodness, normally I'm not quite that much awake at this hour, but today I am. So that was one indicator that kind of made me think maybe we might be getting a little bit overdone in Apple. The other thing that I want to mention, though, is that I've had a lot of those stories over the course of the last 5 years even, but now it almost even feels to me like we might be at a little bit of a plateau on Apple. Now, hear me out on this one. My mentality with Apple right now is very much the Missouri mentality. I went to college in Missouri, so this is something I heard all the time. This is the show me state, so show me. What I'm looking at with Apple in terms of my personal sentiment, I believe that around the 120, between 120 and 105, we're just kind of dangling there. And we've been doing that now since we first crossed the 105 mark in late October. And so for 3 months now, we've just kind of been going up and down between the 105 and 120 mark, or 1975 is what I'm showing as a high. And so I'll become a bull and jump on the Apple bull train again, hardcore. I'm still an Apple bull for the long term, but I'll be on the Apple hardcore bull train if we can break 120. Until then, I'm going to be playing it a little bit more cautious. After this earnings announcement, we'll see where we can go. But if we don't break 120, I'm going to be, for my shorter term financing plays, I'm going to lean towards more negative deltas in terms of financing the longer term put on Apple. And just because of the fact that Apple's a great stock, it's a great company, it does a lot of great things, but it needs to show that it can go past 120, and that's something it's had a hard time doing thus far. So that's the first thing that I want to go through. Once again, just going into the earnings tomorrow, long stock, long put, and then we'll determine later in the week ways with which to finance the new set of protective puts. Next thing that I want to go through today is just something that involves trading discipline in general. This is something I've talked about a lot the last couple of weeks. In my SPY call strategy, still have yet to buy a call this year. We did still, the SPY actually closed 2014 at 205.54. And until we get a close above that mark, I'm going to be real shy about getting into SPY and the call side of it. Now, we've been able to just do a few out-of-the-money put spreads and make a couple bucks here and there, but we still have not been long any calls, since 2014. Now, today we closed just under it. And right now in aftermarket trading, as of about maybe 45 minutes after the close of trading on Monday, we are above it, just looking at SPY. But what I'd like to see, if tomorrow, towards the end of the day, we are above it, then I might get into it, but I would strongly prefer to wait till after the Fed announcement. Ideally for me, I'd like to see, this would make things a lot easier for me to go down a lot between today and tomorrow going into the Fed announcement, so I don't have to make that horribly painful decision of should I trade or shouldn't I trade. But if we're ahead on the year in the SPY, I will get long call options because that's my trading rule, and it's important to stick to that rule. Now, last thing that I want to talk about is XLE, and I've had this conversation with several clients of mine. There's ways with which you can manage risk. You can manage risk through stop losses, through protective puts, through altering option strategies. You can do a lot of things. But with buy and hold, it's difficult to manage risk. And with XLE, I think that's a buy and hold type of investment right now. And so to give you an idea of it, we're gradually putting people into XLE right now. We're not using options. Now, I know that's like, I'm probably going to, basically, I just committed career suicide by just saying the thing with which I said. It's kind of like in Jerry Maguire when he wrote that memo in that movie. I'm actually doing something without options. Well, hear me out. Hopefully you can forgive me for such an evil thing. We're taking a very small position in XLE. So that way, if oil does continue to drop, well, we're managing risk by taking on a small position. Reason being is that if oil does come back and if XLE does come back, I believe it will be a pretty significant profit. I believe we can get 20% of gain in XLE over the course of the next year if it does come back. Now, will it? I don't know. And if it does go down, we've talked about on the show before, well, you're saving money at the pump at least. So like Mark Longo indicated a couple weeks ago, we are natural oil bears because of the fact that we have to pay for gas by paying at the pump. I have a similar philosophy on silver. I think it's too choppy to try to hedge or to create income on. So I think the best position for both XLE and silver is just to take on a small position and let it sit there. Now, in time, if you feel more comfortable buying a leap option or something like that, that's fine. But I'm not doing that. I think this is one of those few situations to where, in my opinion, buying the underlying unhedged and taking a small position is the better way to go. With that being said, that concludes today's today's section of the strategy block. Tune in next week because we will definitely have more.
Yeah, I'm looking forward to hearing how your update post Apple earnings, if you're tightening up your protection or what the case may be. A lot of rumbles, of course, coming out for the future. Near term, probably looking pretty good for Apple. They're selling a boatload of iPhones, particularly in China, so that'll all be good. Of course, the little bit longer term rumblings are that new iWatch gets about, 2 to 4 hours, some people are saying, based on the test, if you're using a lot of apps. So that clearly perhaps could be problematic going forward. It's a lot to weigh in the future there for Apple. So even Uncle Mike perhaps considering not all things go up in the Apple world going forward. Bear that in mind, listeners, as you're structuring your Apple trades. Now it's time for us to keep on rolling right on into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Welcome to Around the Block. This is the portion of the show, as the name implies, where we talk about what's coming down the pike for the rest of this week. As we alluded at the top of the show, heavy on the earnings this week, so I think that's where a lot of the eyeballs will be headed. Looking at Microsoft again for our last update, I mentioned that at the money, 46 half straddle went out about $1.70, $1.75. This 47 around the same level. Of course, it closed right around 47, and now we're trading off about $1.50 in the after hours, 45 half or so. So coming in right around the edge of that straddle range. We've seen Microsoft actually kind of outperforming their straddle in some of the recent cycles, which is a bit of a change of pace for them. We've joked many times in the early episodes of this show that Microsoft is one of the more reliable premium rights going into earnings that we had ever seen. And for the better part of a decade, that was certainly the case. They're starting to break that tradition. We'll see if today's announcement and this quarter will follow suit or not. Of course, we also have a lot of big names coming out the rest of this week as well. Tomorrow, like Uncle Mike just said, we have Apple. Big news coming out from Apple. A lot of people paying attention to that. Also have YHOO getting a little bit lost in the shuffle there, but YHOO also announcing their earnings. We got Boeing and Facebook on Wednesday, and then on Thursday, a bunch more techies, Amazon and Google. Two of the big ones, as well as Ford, for all of you paying attention to the car realm. All right, so Uncle Mike Tusaw, what are you watching for the rest of this week, sir?
Well, like you mentioned, the fruit company has the earnings coming out Tuesday after the close. And make sure you verify that that's the actual date and time, because that's what Longo said. And pretty much you can't trust anything that this guy says when it comes to Apple earnings. The other thing that I think could be a market mover is the Fed. I don't know if it will be. They might punt, but if the Fed does say something, I could see that being a big market mover. It was in December. And so if Ms. Yellen says the right things, we could be way up or way down come Wednesday, closer to the close. Excited about the big day.
Fed, Apple, you got a lot on your radar, Uncle Mike. I'm not sure how you sleep at night.
My kidneys are the BBI is taking it to a whole new level. It's like for a mailman when the Sears catalog back in the old days, if you had like the Sears catalog and then like another major catalog coming at the same day, how his shoulders would just be dead. That's kind of my situation right now. It's
not a bad analogy. You are the mailman around Sears Catalog Day, perhaps circa 1984.
That's what I was thinking.
Something along those lines. Mr. Alex, you certainly remember the Sears Catalog days, as many other fine catalogs, perhaps some watch and hat catalogs as well. But aside from your catalog of catalogs, if you will, what else is catching your eye for the rest of this week, sir?
Macro, I'm looking at the sovereigns and enormous moves today in both Japan and Germany. Probably a lot of it triggered by Greece, but German 10-year today, based on the rate, had almost a 200-vol move, and the Japanese had almost a 70-vol move realized today. So can't let macro sort of get out of the view. But to Mike's point, and to your point, Mark, a lot of significant earnings today. Sentiment about Apple has been fairly favorable going into earnings in terms of all the news stories today. Amazon will be interesting because Amazon is always kind of a little bit of a wild hair there. But the drug companies are coming this week. Lilly, Baxter, Abbott are coming. And the Fed. There's no getting away from the Fed. And I have hung that Janet Yellen poster, and she is my new favorite. But I don't expect a lot from the Fed. I think we all expect some really clear ambiguity from the Fed, but I don't see them doing a lot here. The other thing I'd want to talk about is if the weather does hit New York the way they expect tomorrow, markets are going to be thin. Obviously, markets will be open unless it's an absolute disaster, but markets may be thin. Folks getting into the New York and the NASDAQ, even though a lot of stuff is electronic. So please just be aware, when some of these earnings reports hit, Apple will be after the close, but markets could be thin on Wednesday morning with the weather, so just trade carefully.
Good advice, as always, sir. And last but not least, we'll see if the snow has spared him yet. Mr. Rock Lobster, what are you watching for the rest of this week, sir?
You just have to keep plugging those universal service bus. Anyway. FOMC, and again, looking to see what makes stocks go higher. I don't think the Fed's going to help much anymore. Apparently, the market didn't worry about Greece or some of these other things. Oil's kind of in the basement. So, what makes us go higher? Like Mike says, I like to see us get to higher prices before I get excited. It feels more like I'm going to sell some put spread type of market instead of being I'm going to buy some call type of market. So it feels a little sideways, and kind of that's what we've got right now. And it looks like the earnings have been okay, just not great. So not enough to really do anything really exciting one way or the other.
You'll be like our friend getting 1% all the way out to April. That's the plan?
Yeah, well, I'll try to get a little better than that.
1.5%. Go big. All right, thank you for that, Mr. Rock Lobster. And that, of course, brings to an end this episode of the Option Block. But before we go, as always, I want to check in one more time with my cohorts here on the old All-Star panel, see what they have cooking that may interest you. And since he is coming in and out, the snow is striking in his area, we'll get him up first. Mr. Rock Lobster, what is coming down the pike in the land o' the pit?
Well, the biggest thing we're going to be adding soon, besides our monthly webinars, we're going to open up a store, essentially, on using from our webinar library and our library of, creating trades and how different positions work, how we walk through them, so people can log on and order a webinar right out of our store, something that we haven't done before. And the price will be right, pricing, past content in a kind of a digestible fashion. A lot of our clients are busy and they want to be able to download content and view it as they will, kind of like on the Option Insider Radio Network. So that will be probably the biggest thing you'll be seeing very, very soon. Very soon.
We know a thing or two about on-demand content here. People tend to like it, it seems like.
That's what people have been asking for, and so when you're a small business like ours, you're trying to shape what we do into digestible pieces. So that's what they're asking for, and that's what they're getting.
We find it's always a good strategy to be unobtrusive to your end user at the end of the day. Work on their schedule, not on yours, and people seem to like that. So I like the fact that a guy at Reykjavik can get this show at 2 a.m. if he wants. We approve of that.
Exactly, and I think we have clients in every continent but Antarctica. But we're still trying for those penguins. We're trying to get a couple of
those penguins. That's serious dollars there. I'm not surprised you're going after those dollars. All right, sir. Be safe in the coming onslaught. Meanwhile, we'll move on to a little bit closer to home. Uncle Mike Tusaw was coming down the pike in the land of RCM Wealth Advisors.
I think it's very smart to go after penguins just based on the movies. The penguins are the ones that handle the money, so I think that's very smart. Couple things. If you guys, any of our listeners out there are interested in working with an advisor such as myself, if you have just a couple $100 a month to invest, I am willing to work with you. I am looking for longer term clients, and I am willing to work for a lesser amount of money in terms of a minimum. I believe in options. I believe in hedging. You guys know what I believe if you are on the show, because I say what I believe when I'm on the show. So if you are interested in working with such a person, feel free to give me a call at 312-212-3531 or send me an email at mtusaw@rcmam.com.
Yeah, it might be an interesting season to make that call, listeners. If you got a lot of holdings in Apple, you're thinking about setting them up, and you might want to think about hedging them and also finding ways to protect and pay for said hedges, then Uncle Mike may be the man to call. So check him out, give him a ring. I think you'll like what he can do for you, particularly when it comes to paying for that protection, the all-important skill that a lot of advisors out there seem to lack. A few guys out there, not many, a few guys can buy a put here or there. Not many of them can actually pay for that put. So Uncle Mike brings that to the table as well as a very, very low BBI on most days. So you can count on that as well. All right. And last but certainly not least, Mr. Viceroy was coming down the pike in the land of Options Express education and live events.
Showcase a handful of webinars. Wednesday, January 28th, Mike Zaremski, who runs our futures desk, is going to do an orientation to the futures resources here at OX. That's for new customers or customers who are early on into the futures process. Nina Milovac, who's my partner up here in education, also on the 28th, she's going to do an introduction into long calls. She does kind of a continuing series, so folks can, if they miss one, come back the month after. Also on the 28th, she's going to talk about using covered calls in IRA accounts. Then on the 29th, we have a new presenter in the webinar series, and I'm going to butcher this name. Misko Tomzik is going to talk on capitalizing on turmoil in futures markets. when I saw this go up, I looked at Bisco's resume, and he's got a very impressive resume. Worked at a couple significant funds prior to what he's doing now. And our first live event of the year, Jimmy Ruzan and his crew will be in the sunny, why does that shock me, sunny Las Vegas on Saturday, February 21st, doing their 3/4 of a day presentation. All the events, including the live events, are free. Come to optionsexpress.com. Click on the Educate tab. It's ahead of the login. You don't have to be a customer to attend an event or attend a webinar.
All right, good stuff. Surf on over to optionsexpress.com to check it out for yourself. And on behalf of the Viceroy and the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and for sending in such great questions. We'll get to them on Thursday, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.